Okay, picture this for a second. You're an entrepreneur, right? Maybe just starting out, maybe looking to grow, but traditional loans, they seem impossible to get, or maybe just too risky. But what if I told you there was a way, like a really strategic way, to use your own savings, even if it's not a huge amount, to build serious business credit fast and safe?
Yeah, that's a hurdle so many business owners face. It feels like a catch-22 sometimes, but you're absolutely right. There are smarter ways people often just don't know about.
Exactly, and that's what we're diving deep into today, CD secured loans. Seriously, they're this financial tool that's surprisingly powerful, but honestly, most people haven't got a clue how to really leverage them.
Right. So our mission today is really to break down what these loans are, how they actually work, and crucially, why they're such a win-win for you, the entrepreneur, and interestingly for the banks too. We're going to give you like concrete steps, some clever strategies you can actually use, show you how to turn that savings you have into a real financial lever. Build that solid business credit history, even if you're starting from scratch or your personal score isn't perfect.
Yeah, get ready for some aha moments, folks, because we're really getting into how you make your money work harder for you. So to really get this, we need to start with the basics, don't we? Like strip it back. What is a CD secured loan?
Okay, fundamentally, it's financing where your own money, the money you've put into a certificate of deposit, or CD, is the collateral. The key thing here, unlike most loans, is that it's not really based on your credit history or income. It's backed directly by the cash you've already deposited.
Okay, right. But I can hear people thinking, why borrow my own money? That
Right.
sounds weird. What's the point?
It does sound counterintuitive at first, yeah. But it's purely strategic.
Hmm.
People do it mainly to build or improve credit history, personal or business. That's the big one. Plus, you get much lower interest rates than, say, an unsecured loan. Or you can get cash quickly without actually closing your CD and facing penalties.
Ah,
And the accessibility is huge. Banks take on almost zero risk, so they're way easier to get approved for, even with bad credit or like no credit history at all. And here's the kicker. Every single on-time payment you make, it gets reported to the credit agencies, personal, commercial.
yeah.
It directly boosts your financial profile.
That makes total sense. Okay, so for anyone who needs a quick refresher or maybe isn't familiar, let's quickly cover how a certificate of deposit, the CD itself, actually works, because that's the foundation here.
Sure. So a CD is basically a savings tool from a bank or a credit union. You deposit a fixed amount of money for a set period, could be 6 months, a year, 5 years, whatever. And in exchange, the bank guarantees you a specific interest rate, the APY, for that whole time. The main thing is those funds are supposed to stay put until the maturity date. You can't just dip in and out like a regular savings account.
Right. And if you do need the cash early, before the term ends, what happens?
Yeah, there's usually a penalty. You typically forfeit some of the interest you've earned. It could be like 2 months worth, could be up to 12 months worth. Really depends on the bank's rules.
Okay.
But despite that, CDs are super safe. They're FDIC insured, up to $250,000 per depositor per bank. Very secure place to keep money.
And what affects the interest rate you get, the yield?
Uh, a few things. How much you deposit. Sometimes bigger amounts get slightly better rates. The length of the term is a big one. Longer terms usually mean higher APYs because you're locking your money up for longer.
Hmm.
And even the bank itself matters. Sometimes local banks or credit unions offer better rates than the big national ones.
Gotcha.
But yeah, beyond just saving, the really smart play with a CD, this strategy we're talking about, is using it as collateral. That's what gets you the lower loan rates and often lets you skip the heavy credit checks.
Right. Okay, so this is where it gets really interesting for entrepreneurs. How does this CD secured loan thing specifically become a game changer for them? What are those key advantages?
Oh, it's a massive edge, mainly because of access. Since your own money backs the loan, the bank's risk is like practically zero. So approval is way easier. Even if you're a brand new business, no long track record, maybe not much verifiable income yet, those usual roadblocks, they often disappear.
Which leads right into that other huge plus. No intense credit check, usually.
Exactly. Many banks just don't do the deep dive they would for an unsecured loan. So perfect if you're trying to build business credit from the ground up, or maybe repair it.
And that means every payment you make?
Every single one, on time, gets reported to the business credit bureaus. Think SBFE, Dun& Bradstreet, Experian Business. This is how you actively build that positive history. Boost your score, payment by payment.
And lower risk for the bank means lower interest rates for you, right? Compared to unsecured loans or cards.
Much lower, typically, yeah. That saves you real money.
It's like smart leverage, isn't it? Instead of cash just sitting in checking, doing nothing.
Exactly. You put it in a CD, then borrow against it. You get the funds you need, you don't lose access to that capital entirely, and you're building credit. It's hitting multiple goals at once.
And I bet it's a fantastic way to start building a relationship with a bank, too. You prove you're reliable with this secured product.
Absolutely. It demonstrates financial responsibility. Banks love that.
Yeah.
It can definitely open doors down the line for bigger, maybe unsecured lines of credit or other business products from that same bank. They see you as a good risk.
Makes sense. So let's flip it. Why do banks like these loans? What's in it for them? You said it's a win-win.
It really is. For banks, it's super simple. Almost zero risk. That's the number one thing. If, worst case scenario, a borrower defaults, the bank just takes the money from the CD, no expensive collections, no lawyers, no writing off bad debt. It's clean.
So way less hassle for them. No complex credit checks needed. Saves time, saves money.
Precisely. Cuts down administrative costs. And these loans are easy from a regulatory standpoint, too. They look good on the bank's books because they're secured.
Okay.
And like you said, it's great for relationship building. They get a new customer, establish a relationship in a very safe way, and can potentially upsell them later to more profitable unsecured products.
You know, it sounds almost like they get paid to hold your money and then get paid again to lend it back to you,
Yeah.
completely risk-free.
Huh. Well, yeah, in a way. They earn interest on the loan you're paying back, right? And your CD deposit. That's still money they have, which they can use to generate income. It's a fantastic model for them, truly win-win.
It really is. Okay, so putting this all together. For you, the listener wanting to actually do this, how do you get started? What are the steps?
It's actually pretty straightforward. Step one, choose the right bank. Now, not every single bank shouts about these loans from the rooftops. So you might want to look at banks where you maybe want other business services later, like accounts or cards, and often credit unions or smaller regional banks. They can be more flexible than the giant national ones.
Okay, good tip. So once you've picked a bank,
Then you deposit money into a CD. Open the account, make sure you really understand the terms, how long it's for, the interest rate, those early withdrawal penalties we mentioned. The minimum deposit needed can vary, maybe $500, maybe $2,500, sometimes more.
got it. CD is open, now what?
Now, you ask for the secured loan. You tell the bank, specifically, I want a loan secured by this CD. They'll then put a hold or a block on that CD amount, and they'll offer you a loan, usually for the same amount as the CD, maybe sometimes like 90 or 95% of it, with a fixed interest rate and clear repayment terms.
Okay, then the application part, still got to do that.
Yeah, there's still an application. Even though it's secured, you'll provide basic info: name, address, social security number, contact info. If it's for a business, your business details too. You can often do it online or in person.
And approval should be quick then, since there's less checking.
Usually, yeah. Could be hours, could be a couple of days.
Right.
Much faster than typical loans.
Right. Then you sign the papers, get the money.
Exactly. Review everything carefully first, of course, then sign. The loan funds usually hit your account in a few business days. And just remember, this is key, that CD is locked. You can't touch it until the loan is fully paid off. Then you use the loan funds for whatever you need. But the most important part, make those payments on time, every single month. That's what builds the credit.
That's the core process. Okay, but here's where it gets really clever, right? You mentioned a way to use this strategy even if you don't have the initial capital yourself, like using borrowed money. Let's walk through that Juan example.
Right, this is a fantastic strategy, especially for building credit from zero. So let's say Juan needs business credit, but doesn't have, say, $10,000 lying around. But he has a friend or family member who trusts him and is willing to lend him that $10,000 short term.
Okay, so he borrows the $10. What's the move?
Juan takes that borrowed $10,000 and immediately deposits it into a CD at a bank that offers these secured loans.
Then he instantly applies for the CD secured loan for the full $10,000.
Exactly. The bank approves it quickly because it's fully secured by the CD he just opened. They give him the $10,000 loan funds.
And then,
Here's the genius part. Juan immediately takes that $10,000 loan money and pays back his friend instantly.
wow.
So what's the result? The friend is whole, no risk to them. Juan now has an active $10,000 loan reporting to the credit bureaus. He just needs to make the small monthly payments on it. He essentially manufactured a credit building loan using borrowed funds temporarily without using his own capital long term. The bank doesn't know or care where the initial CD money came from.
That is incredibly smart, leveraging a personal connection to kickstart a formal credit building process.
It's a very powerful, low-risk way to get that credit history started when you don't have the capital up front.
Okay, brilliant strategy. But what if someone tries this, goes to their bank, and gets told, nope, sorry, we don't do CD secured loans? What then? Are they stuck?
No, definitely not stuck. Don't give up after one no. First thing, check out community banks or regional banks in your area. They're often more flexible, more relationship-focused than the huge chains.
Good idea. What else?
You could also ask specifically about internal policies. Sometimes these loans aren't advertised, they're more like an off-menu item. Try talking directly to a branch manager or a loan officer, not just the first teller you see. Explain what you're trying to achieve.
Okay, worth a shot. But if that still doesn't work, is there an alternative for building business credit that's kind of similar?
Yes, absolutely. The next best thing is often a secured business credit card. Works similarly in principle. You make a cash deposit, and that deposit usually becomes your credit limit. You use the card, make payments, and crucially, the activity gets reported to the commercial credit bureaus.
Oh, okay. But you emphasize business credit card there. Does it have to be specifically a business one to build business credit?
That is the critical point.
Yeah.
Yes. And not even all secured business cards report to the key commercial bureaus, like D&B, Experian Business, Equifax Business. Many only report to personal credit. So if your goal is building business credit, you must find a secured card that explicitly reports to those commercial agencies.
Got it. Are there any well-known ones?
Well, the Wells Fargo Business Secured Card is frequently mentioned as one that does report to Dun & Bradstreet. Although, fair warning, some users say you might need to call them periodically, like every couple of months, just to make sure it's actually reporting consistently. It's a bit quirky sometimes.
Okay, so due diligence is key there. What questions should you ask before getting any secured card then?
Definitely ask, does it report to the commercial credit bureaus? Which ones specifically? What's the minimum deposit? Can it eventually graduate to an unsecured card? And what are all the fees involved? Get those answers up front.
Right. And if your main bank just flat out doesn't offer the CD loan or a good secured card option?
Then honestly, consider opening an account elsewhere. Find a bank or credit union that does offer these products. The effort involved in opening a new account is usually well worth the long-term benefit of building strong business credit. Persistence really pays off here.
Okay, so to help people get started, maybe we can mention a few institutions that are often cited as potentially offering these CD secured loans. Keeping in mind, policies can change and vary.
Sure. Among the larger banks, people sometimes have success asking at specific branches of Wells Fargo, and remember, their secured card reports to D&B. Also, PNC Bank, Regions Bank, TD Bank, US Bank. But again, you really need to ask at the local branch level.
Then credit unions.
Credit unions are often a great bet. Big ones like Navy Federal, NFCU, or PenFed are known for secured loan options. But don't overlook your local credit unions. They might not advertise it widely, but they're often very willing to work at numbers on things like this. A face-to-face conversation can work wonders there.
Perfect. And when you do talk to any institution, what are those absolute must-ask questions again, just to nail it down?
Okay, essentials are: 1. Will this loan report to credit bureaus? Specify which one's personal, commercial, both. 2. What's the minimum CD amount? 3. Do you loan 100% of the CD value or less? 4. Are there any fees, origination, maintenance? 5. What are the exact terms, payment schedule, interest rate, any prepayment penalties? Get clarity on all of that, no surprises.
Excellent checklist. Okay, so let's say you've done it. You've got the loan, you're making payments diligently. But building credit isn't a one-off thing, right? It's ongoing. What are the key practices to keep that momentum going? Keep building a strong business credit profile.
Absolutely. It's a marathon, not a sprint. Number 1, top priority, always. Make all payments on time. Every single one. Across all your accounts, a perfect payment history is gold. A single late payment can really ding your score. It's the most important factor, bar none.
Makes sense. What else?
Keep good records. All your loan agreements, proof of payments, any important emails or letters from the bank. You need that paper trail just in case there are errors in reporting later.
Good point. And you need to actually check that reporting, right?
Yes. Actively monitor your business credit. Use services like NAV, Credit Signal, which is from D&B, or Experian Business. Log in regularly. Check that your loan is listed. Make sure the payment history looks correct. Catching errors early is crucial.
Okay. And once you have the secured loan showing up nicely?
Diversify. Don't just rely on that one account. Once you have some positive history, start looking into maybe an unsecured business credit card, a small line of credit, or getting accounts with vendors who report to business credit bureaus, Net 30 accounts, etc. A mix of credit types looks good to lenders.
Right. Shows you can manage different kinds of debt responsibly.
Exactly. And always try to separate personal and business finances. Apply for business credit using your employer identification number, EIN, not your social security number, whenever possible. Build that distinct business credit identity. It protects your personal credit, too.
Smart. Anything else?
Yeah. Maintain those banking relationships. It's not just about the loans. Having active business checking accounts, keeping decent balances, maybe chatting with the branch manager occasionally. It all helps build rapport.
Hmm.
That can make getting future, larger financing much smoother.
So it's the whole picture, not just the credit score itself.
Totally. And finally, don't be afraid to repeat what works. Once you've successfully paid off a CD-secured loan, consider doing it again, maybe with a slightly larger amount or at a different bank to broaden your relationships. It's a proven way to accelerate your business credit score growth.
Fantastic advice. So let's recap. We've really gone through the whole world of CD secured loans today. How they work, the step-by-step on getting one, how to tackle challenges like your bank saying no, alternatives like secured cards, and importantly, how to keep that credit growing long-term. You listening should now have a really solid strategic roadmap for building or seriously strengthening your business credit, even if you felt like you were starting from zero before.
Yeah, I think the big takeaway from this deep dive is that building a strong financial foundation for your business. It isn't really about luck. We're just waiting for some big opportunity to fall into your lap. It's about having that strategic mindset and the discipline, really, to use the tools that are actually out there, tools like these CD-secured loans that maybe aren't obvious at first glance.
Absolutely. Remember, you don't need to be some financial giant to act like one strategically. You just need the right information, like you got today, and a plan to put it into action. So here's something to think about after listening. What's one strategic financial move, maybe inspired by this, that you could make today or this week that you hadn't really considered before?